The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And it is the Power Trading Hour on a day that is very interesting for us out here in the trading land. We've got action, as they say, smaction, as they used to say in my early days of trading in dingy, smoke-filled trading rooms on the internet. And those are the early dark days, 2000, 2001. We certainly have a active market out here. S&P down to 1747, went down to a low of 1744, kind of bouncing around that 2% level off on the S&P cash. We certainly have plenty of volume, 2.8, almost 2.9 billion shares on the consolidated New York Stock Exchange tape. So we're going to have a busy day out of here. We're going to talk about some news, then we're going to get into some trading. But my guess is that we're going to have one wicked close, and I'll probably be closing my short positions in them and expecting a bounce. Probably take about 3 days down around these levels to wash out a lot of people on margin, and then probably see something. But I've been short for a little while. And, we're down probably close to 100 points of where we bought S&P options, SPY options to the downside. And those have done quite well. We also have some other positions that are monster winners. And the question is whether or not to hang on for a few more days, hoping for catastrophe. More likely, we're probably seeing some kind of exhaustion move, setting up the ABC down to 1670, which is where I think we're going. But probably the easy money for me is over at this point, and we'll get into the news and then stocks later. Time to take a deep breath. But I've got a lot of trailing stops, that kind of stuff going on, so we'll talk about some of the trades that I had that I'm already covering, and some of the trades that I have trailing stops on and probably be out of today. But a lot of them are fairly big winners, and so I'll probably be going out for at least a decent dinner tonight with me and the chickie poo. Somewhere nice bottle of wine and a nice dinner. In this day in 2000, James Cramer, you may know him from CNBC fame, wrote for his new IPO, TheStreet.com, and gives a speech at a technology conference in New York City naming his 10 favorite tech stocks, which he christens the winners of the new world. Among them, Ariba, Infospace, Ikotomi, VeriSign, and Veritas. These are the only ones going higher consistently in good days and bad, declares Cramer. I love every one of them. That's why despite the 80% increase in the NASDAQ last year, we're looking for another record year now. These winners of the new world go on to lose an average of 82% in the next year that he loved. However, Cramer is right about one thing. The NASDAQ does set a record in 2000, falling 39% for its worst annual loss in history. Yeah, of course, you can always get these days in financial lore, but when people talk to me about Cramer, my belief is that he's probably not that bad of a trader when it comes to this, but certainly echoes what the street wants him to sell, or sell and save and sell much more often than probably what he actually believes. In 1929, the Dow Jones Industrial Average was up an astounding 60.5% on this day. For the last 12 months, the Federal Reserve Board reminds its investors that the Federal Reserve Act does not contemplate the use of resources of the Federal Reserve System for the creation or extension of speculative credit, which is what they're doing actually today. So always a wonderful thing. But of course, they don't do jack. They actually add more leverage, and we go right into the bubble in 1929. Does it sound eerily familiar to what's happened to these days? So traders, just because they don't believe them, because the Fed is big on jawboning and very weak on actually doing anything, laugh them off and send the Dow up another 20% over the coming months into the September-October timeframe, where the giant crash happens and puts a market into and a country into a tailspin for 10 years. Anyway, always interesting to see why these people that are all thought of as just the most intelligent and creative and wonderful people in the world so often are wrong. But they're popular and they're on TV, and they're the head of the Fed. In other news, a lot of people are wondering what's going on and why we're seeing this weakness. Of course, I talked about it last week. Look very hard at Russia, and we already saw a weakness last night coming in Asia. But with the addition of Russia starting to get hit, that was it. I think I brought that up on Wednesday last week, that most people weren't talking about the problems that Russia had and how it could easily affect this market, especially with China out this week. Normally, you would think that you'd get reduced volatility during this week. I've had to sit on my hands with some massive winnings on the short side, waiting for the day when we get anywhere close to looking at a day of either capitulation or exhaustion. I suspect we're probably closer to the exhaustion move, and looking for maybe some Fed action if this continues, mostly because Yellen will be in front of Congress in the next few days, and I don't think she wants to explain why the wheels fell off the wagon the day she took the steering wheel. Or the reins. Probably, I'm mixing my metaphors here. The reins would be much, much better. So anyway, we've got a great day going on. Of course, besides Russia, we've got the Chileans. I heard one of the funniest things on the weekend, according about Argentina and how the South American countries get together. And according to this Chilean, Argentinos are Italian who speak Spanish, have the manners of the French, and think that they're English, which I always thought was just a laugh riot. But we're seeing basically Argentina implode over the last week or so. And they've been, over the weekend, heavily blaming foreign vultures for an economic meltdown as power cuts hit Buenos Aires and goods vanished from supermarket shelves. Everything is 25% more expensive than it was a week ago. And, of course, this was the same wonderful country that invited all the Nazis to hide out after the Second World War. There's just been a belief forever down there. Maybe their culture is cursed for some reason, but they certainly like their fascists. And the belief that it could ever be their own fault seems to escape them, and they continue to vote for people that are even worse. But don't cry for me, Argentina. Other things going on, fund flows. I talked about this last week. I was staying short because Trim Tabs was showing at least what I was thinking would be more money coming out of these ETFs than coming into the 401ks this week. And I think today's action gives you a good idea. Nobody's stepping in to spend any of that money so far in fund buying. And the question is there any out there? Probably is some. But maybe it's being swamped by a lot of people deciding that it was time to exit stage left and taking a lot of that ETF money out of the marketplace. I suspect that we do have a Fed that's very active. I think that there's a 70% chance it's the Fed, 30% chance it's the street, that we've seen nothing but people stepping in night after night to hold the futures up, only to see the market crater during the day. It's fairly easy if you've got a lot of cash and deep pockets to be able to hold the market up in the morning long enough to sell out of the futures that you bought up the night before to make a market look like it's holding. But it is that. But I think the best we could have expected is the market goes sideways today. At worst is what we've seen today, which is a S&P off 35 to 38 points already, and a close that looks like it could get incredibly ugly without intervention out here. And, maybe we pop a few points up off the bottom, but it is going to be somewhat problematic to see a market do that. But everybody wants to buy every little dip down here at these lows, and my guess, like I said, is that we're going to see a lot of people on margin taken out here, and that's going to take 3 days for the margin calls to go through. Normally, if you get a margin call, they'll say, well, you've got 3 days. And the market's more than good at holding at lows or highs to let those people on margin get fried. And I don't see any difference down here. It may not be a lot of downside left to the market, but my guess is that we aren't going to be seeing any kind of significant bounce out of this market for 3 days. And we are setting up that ABC to 1670 on the S&P cash, 2.93 billion shares on the consolidated tape, and we'll find it. But anyway, got Daryl from the previous hour, very active in the den now. Of course, a lot of fun probably being had in those. What else do we have? Even though China is closed this week, we did get some news out before they did close. China Mobile, their biggest telecom, is expecting to build out 13 to 14,000 fiber lines between 400 major cities across China. It's planned that the world's largest 100 gigabit backbone deployment. Basically, think of Google Fiber for their entire country. And not a lot of money to be made outside for us guys here in the United States. Alcatel is the only player that's going to be selling equipment into China for this, and you can look at them or look them up. Meanwhile, AT&T, Comcast, Verizon are doing everything that they can to slow down the expansion of high-speed digital lines in the United States. And Tom doesn't like the people that do a lot of pharmaceuticals. I think the true evil is in AT&T, Comcast, Verizon, and these guys that are doing everything they can not to put in a gigabit Ethernet to every one of our houses. But maybe it's just me. Congress is looking to pass a mammoth farm bill. My guess is that, from what I've read, is that it does go through. Part of it's going to be a huge extra fee on home heating oil. Extra fee. Tax. Let's call it what it is. Tax. And this is going to be hitting consumers pretty much in the coldest weather states over the next few days. Anyway, what can you say? We'll be back in a minute. You can give me a call at 877-927-6648.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with TAS Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to TAS Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hey, and we were talking about how Chinese are going to basically give 100 gigabyte backbone throughout their entire country. And I had a question in the den about why AT&T, Comcast, and Verizon do everything they can to slow down the expansion of high-speed lines in the United States. And the answer is they can. They can pay off, they can basically bribe congressmen and senators not to lean on them. And, of course, they are a virtual monopoly. The Chinese understand that having a vibrant and very powerful Internet system is crucial to their economic development. And, of course, if they spend the money, then, of course, their stock prices go down, and they can't give themselves huge bonuses at the end of the year. And most of these guys pretty short-sighted know that, like Verizon and Sprint, these guys have a very small horizon of the future where they're going to make all the money they can, 20, 30 million a year in the next 3 or 4 or 5 years. And whatever problems that they can push out past then are going to be fine, but they'll be making their big money push. But probably goes back to the origins of all of these companies besides AT&T. MCI, almost all these long-distance telecom companies and cable companies came out of, my boss used to call almost everybody in the cable industry ditch diggers. He said because they knew absolutely nothing about delivering a video signal to the consumer. They knew everything about digging ditches and throwing cable in it, but that was about it. AT&T, of course, had a monopoly forever, and they were used to it. And, of course, we had the famous one ringy-dingy, two ringy-dingy commercials about the hubris at AT&T. The rest of the companies like MCI, WorldCom, all these were started by used car dealers, literally. My dad worked for MCI for, I think, 6 months after he got out of the Air Force. Told me just how horrible all these people were. And basically, they were always figuring out one thing, and that is that you had money, and that money was theirs, and they deserved that you just fork it all over as hard as they could. Not that they would improve their products, not that they would make it like an iPhone, that people ran to give you money. They would do everything to cheat, screw, and cheat you out of whatever you have. And I was talking to Mike in the office, and he basically said, well, I can understand that. He said, I called like 10 times to get a refund, and they always, if you stay on the line for 2 hours, they'll give it to you. If not, they just hope that you hang up and go away, and they get to keep the money anyway. Just a culture that got started, I suspect, from those two industries. One, the ditch digging industry, where you got a contract to provide cable in a certain area by paying off the mayor and the alderman and everybody else, whatever little fiefdom you were in. So you got started in a climate of corruption. Same thing in AT&T. All these guys came out of it. And, of course, all of them came out of a town that I lived in. Topeka, Kansas is the absolute center of the continental United States, and it makes a lot of sense that if you're going to have huge lines and a network, to put the center of it right in somewhere between Topeka and Kansas City. If you go to just across the state line in Kansas, you'll find a giant 13 buildings, high-rise buildings for all of Sprint. AT&T, Comcast, all the rest of them have big offices there also. MCI did at one time. And it makes a lot of sense. You are going to be in the absolute center, network-wise, of everything in the United States. And so why so many, trucking companies are located around there. It makes sense to be in the center. But what we do know is that is just it was the way they were started and the way they continue. And I think Google trying to scare them into getting in and dragging themselves into the 21st century has just made AT&T and some of these others dig in their heels. The whole fiberhood thing, they now, instead of just talking about it in a perverse way, are now actively going after companies like Google that want to set up super gigabit networks and trying every regulatory trick to go in front of them. But that's it. Short-sighted, for the most part, corrupt, and I think even worse than the pharmaceutical community. But it's not good for me to keep all my opinions inside. One day I'll let them out.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
As we come back, a couple of questions. Lazy consumer, what do you think? Arrow online TV service, well, it's got to make it through the Supreme Court. If it does, I think it's a huge winner. And they opened up in New York the last couple of days of last week and sold out in 48 hours. So they're going to have to probably double their capacity in New York City. So from every way you can look at it, Arrow is the streaming service that uses little tiny antennas at a head office and allows you to watch your videos from broadcast TV anywhere you want. Of course, a big startup that, depending on the Supreme Court, is either going to be a huge winner or a total loser. So we'll see in a little bit. There is a great chart coming out right now, and that is a Venn diagram. It's from Duncan Weldon. If you want the link to it, you can always email me at path@tfnn.com. That's PATH@tfnn.com. I'll send you the link to it, but probably a great way to look at the problems we're having today. And that is there's been some news out there about the mints, Mexico, Indonesia, Nigeria, and Turkey. The BRICS, South Africa, India, Brazil, Russia, and China. And the Venn diagram I'm showing, if you're just listening, pretty interesting because it shows the fragile five. and that's Indonesia, Turkey, South Africa, India, and Brazil. And those are the economies we need to be watching very closely now, that we're basically hanging on for political reasons in Turkey and in Indonesia, economic reasons in South Africa, India, and Brazil. So just remember the fragile five: Indonesia, Turkey, South Africa, India, and Brazil. Those are the ones we want to be watching every morning. I'm thinking we're going to be moving Russia into that Venn diagram after the Olympics. But certainly they're seeing their currency hit over the last few days, at least what I saw, and certainly bonds that they were trying to sell. But we're going to get into now some charts, and we'll get going here. One of the shorts that I brought up was a wonderful setup is LOPE, L-O-P-E. I did go ahead and cover that short today, and we were short this in the daily newsletter at over $50. So we got pretty much probably everything we could expect out of the first down move. This is probably going to set up an ABC on the next bounce if we're lucky. And then we're going to see that move back down probably into the $32 level. So setting up probably the next big range on a lot of these. But not a bad trade out here. I think I went short at $50.50 or so. And I'm going to get close to $8 out of a $50 stock, which is not bad. But we can look for better out here. And some of the other shorts that I had on was X1. I've got a trailing stop on it today. I'm going to probably close this short before the end of the day. But I've got a $1 trailing stop on this right now. My target was $42. We were shorted in the newsletter at 68, so this will be my one of my big winners for today. This one was one of these excellent ones where you saw the intraday reversal. It was going up against its previous high at $64.70 on November 14th. That had 2 million shares. You got in that and reversed on 1.2 million shares on January 13th, where we go in ahead and pulled the trigger at $68. Printing now down, where's it at now? 42 and something. What is it? Hang on just a second. I've got internet issues. There we go. That's not it. Okay, so what do we got out here? Trading at it at $43.96. Low was $42.88. 42 was my target range, so we're certainly close enough. I'm willing to let this thing sit and watch it through the end of the day with a trailing stop. But like I said, probably going to see some kind of exhaustion move out of these lows by the end of the day. And, we are sitting at lows. Probably expect this thing to rattle on off. And I'll probably close a lot of the other positions that I have at the end of the day. I think we're just going to get that kind of washout that we look for, and then probably sideways for 3 days, and then start the ABC down. We could get a couple more days down, but I've already been short for a while. And like I said, sitting on some massive moves in some of these short positions. But the X1, we had it at 68. If we get 43 or $44 out of this thing by the end of the day, I'm going to be jumping up and down. Of course, the reason I had 42 as my target out here was the previous lows. Hang on just a second. And let's take a look at this. Come on, baby. And hang on just a second while I move things around. Anyway. Oh, I know how to do it. We'll get it done here. Give it to me. Come on. Give it up. Anyway, we'll go on. Other things going on. was that X1 anyway? The previous low out here at $42.01. I want to leave just a little bit for some other people out there to jump on, but certainly it looks like we're going to get all of that particular trade. UXVY. No, if I can actually type correctly. UVXY. Another one that we got almost all of in the Tech Insider and the path of least resistance is the UVXY. This is the triple of the VIX. We are long right about $60.50 post-split. I think at the beginning we were short at $15.50 or something. Got stopped out, went right back into it the next morning on the move down from 1845 on the S&P cash. So we gave up 50, 75 cents the first round, came right back into it. And we're going to be probably closing out this trade somewhere around 100 today for a $40 profit on a $60 stock. Of course, post-split, but my guess is that we're probably going to be seeing, again, that bottom out here and probably going sideways and be looking to try to find a move back in here, probably in the 70s, once again back in the VIX, but no reason being totally piggy about these markets. But we will be watching it. But a lot of times I was talking in the den and on the radio show of just how many of these huge moves were going to come in off of these highs just because we were so far and extended. I saw far too many people looking at small-term trades that were going to probably give them pennies on what was going to be a huge and massive big trades off these highs, and we certainly have gotten them. Again, you can give me a call at 877-927-6648. Love to have your phone call on this day, but we're looking at a lot of these stocks. Volume big overall on the indexes. That's not uncommon. And probably, like I said, I'm probably going to clean up all my trades before the end of the day today. And we're going to do one thing. We're probably going to either bounce out of here or go down farther. If we bounce out of here and we have that light volume, it will confirm the ABC downs. But I continue to look at that 1670 level. Another one that probably not a big a winner for me, but certainly one I wasn't afraid of, was these moves from TAN, which is all the solar stocks. And I'm taking my money today on this one too. I liked it just because we had a lot of volume on October 22nd, $41.16. Got into that once we closed back below it. Went short at over $40. I think it was 41 or 40.75, something like this. Not one of my bigger trades out of here. We had a nice little move and had kind of the starting of some decent moves down. Unfortunately, this whole sector has gotten incredibly short, so I'm going to go ahead and take my money off on this. My guess is that this is probably going to have some kind of wicked bounce, and I'll get once again another shot out of on this one to go ahead and continue making a lot of money to the short side until we see that 1670 level on the S&P cash. Not one of mine. No. Okay. What a nice one, Polar. Anyway, can you check out VN MasterCard? Okay. Let's take a quick look at Visa and MasterCard. Of course, these things certainly looks like Visa's trying to make its way back at least to the last major high, the October 29th high. You had 2.7 million shares in there. Certainly got awful close to it today, 212.07. Volume really not picking up on this one, but I think you can make probably a fairly good educated guess. At the same time, the last huge high volume day was right in this price level on the 11th of December. You had 10 million shares, so you're going to probably find that support level somewhere around 208 to 205. And like I said, I suspect maybe we're probably going to have a very short-lived bounce, a big short squeeze on a lot of these short stocks that are very short. If we can get the short level down on those real stinkers, then those are going to be the ones that are probably going to really accelerate on the next leg down. Unfortunately, it's a lot tougher to get a lot of these out. Now, on the SPYs, we've gotten everything that I wanted to get. We did buy the SPY puts in the newsletter also for I think $3.50. My target was $10, and we certainly got that today, and we'll be out of them before the end of the day. But we bought the March 14 183 puts on the SPYs, and so going to be cleaning up on that too. So let's take a look at let's go ahead with the SPY SPY. And when we look at this, just about everything we wanted, but there were 2 days out here that I was shooting for, and we've broken through those. The days were the 7th and 8th of November out here when we had a little reversal day. Volume did start to pick up out here. We have exceeded that volume, and but my guess is this is going to be the congestion zone. We could look at low as 174.57 on the S&P cash, and I mean on the SPYs, excuse me, and that is the date of the 23rd of October. We've gotten into that, the low, just about the same out here so far. Certainly going to have a great deal more volume today on that, but I think this is where we're going to start setting that move back up, probably getting back to maybe 178. On the SPYs, maybe 179, somewhere in that, and that may be setting up the next ABC down for us at the highest, maybe 180. I don't think that there's a lot of strength in this market, but I do think we finally have gotten the scare that will set a temporary low in the marketplace. You want either an exhaustion move, which is what I'm thinking today is, or you want real panic in the marketplace. And volume would say that we don't have panic, which makes me think more in the line that we are looking at a market that is getting ready for the exhaustion move for that ABC down. We've got to 3.2 billion shares right now, and maybe this is a good time to really talk with the last minute left of what we know and how we know it. If you flip a coin, you get heads or tails. If you really know that much more about flipping a coin, the odds are always going to be the same. Certainly, if you roll dice, you know a lot more if you get a 1 than you get any other number. If you reach into a bag full of black marbles, someone's put 2 marbles in there, and there's 50 other black marbles out there. If you pull out a black one, you really don't know about a great deal more than you knew when you started. There's still 49 black marbles in there. But you pull 1 red marble out, and you know a great deal that there's only 1 red marble left out there. What you know and how you know it is important. It's called information theory. But one of the things most people don't really think about is the logarithmic nature of the markets. A 100-point move in the Dow and a 500-point move in the Dow. A 500-point move in the Dow is not 5 times the signal, but 9.6 times the signal. As the signal increases, it does so logarithmically. We'll be back in a minute.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
As we come back, we're going to go right to Joe in Plainsville, New Jersey. How you doing today, Joe?
I'm doing well. How about yourself?
Fantastic. So you want to look at a couple of eBay and Netflix. Was look at eBay first.
All right.
Are you already short this?
No. I'm looking to get in on the dip.
To buy it long?
Yeah. At the very dip.
Huh?
At the dip, at the lowest of the low.
Well, I have to say that you want to. The only safe place to buy this would probably be down there at that $48.06 low. Back in. I'll find my mouse here. November 26th. That had 34 million shares. You have an 80% chance in the next 6 months that it hits that $48 low. It's a high volume low, so much higher than the rest of everything in the last year that there's just no way that I would buy this stock until it tested that low. So $48 is the answer.
Fair enough.
Okay. Netflix, I am short this up here at the highs.
I was looking to go short.
Huh?
I was looking to go short. That's the one I was eyeing.
I'm actually going to cover it. This thing really should have broken down today, and it hadn't. NFLX. So I'm going to say I'm wrong on it. I took the puts on it, so I'll probably make just a little bit of money on it. I think I went short one is 408, but just a huge change in the VIX on this thing is going to make my option puts on this thing a winner, but not that big a winner. Certainly not like the rest of the trades I had out here. So I'll be closing this at the end. It certainly has every look to it. I suspect that when I want to pull the trigger on this one again, it's just not ready yet, and that is probably the top of the next ABC move. So if we could get back up.
Fundamentally, how does that look?
Fundamentally, the problem is that the books are, in my opinion, a house of cards. They expense all their videos and everything out for 3 years, although 90% of the people that watch them do so in the first 45 days that they're out. So the problem is that they're expensing things that his value is decreased almost in 45 or 60 days. So what they're going to do is have a lot of hugely back-ended market on what they do. I think this market. I think Netflix falls apart when they actually have to disclose what they pay Disney for the rights to all those Disney shows that they're going to be streaming. I think late this year, next year.
Okay.
Eventually, they're going to have to say it, and I'll guarantee you, Disney. Well, I can't say it. Disney got a great deal from them. And not in a good way, and and that's, I think, once it figures out too, they have a massive problem with expanding into foreign markets. It's not as easy as you would think. Very expensive for them to penetrate third world markets that they are not in today, and that expense is going to hit them on the bottom line. So I have a feeling that they could easily get back down to the $200 mark. The question is when the market starts really looking at stocks like this and Amazon and says, okay, you really need to show us the real books here. What are you really doing? What would happen to your books if you really expensed your new content and looked at it? They're still not giving us the data on what they have for these new shows that they're running themselves. But my guess is that their profit margin would look much more like HBO's than what they have now. If the reality
it's crazy because in the news, they're feeding us all that it's upgrading and whatnot.
Yeah, and two, I think this is going to be a market that's very splintered. I saw that the NFL is starting their own streaming network, and I think you're going to see a great deal more vulcanization of these streaming services. Anyway, like I said, I'm ready to basically clean up everything today and wait for the bounce. We'll see you all tomorrow, same bat channel, same bat time.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.